Exit taxes make the land of the free an expensive place to leave. U.S. exit taxes apply not only to U.S. citizens who decide to renounce their citizenship. They also apply to long-term green card holders. The U.S. is the most difficult tax system in the world to escape from. U.S. exit taxes apply to any U.S. citizen who wants to renounce. They also apply to anyone who's held a green card for 8 out of the last 15 years. Long-term green card holders are treated the same as U.S. citizens. The exit taxes apply to A. Anyone with assets of more than $2 million. B. Anyone who has not filed tax returns in the last 5 years. C. Anyone who paid more than $170,000 per year in tax on average over the last 5 years. There are also some exceptions for some who were dual nationals at birth, even if they have assets of more than $2 million. However, if they have not filed tax returns in the last 5 years, even these people will be subject to the exit taxes. U.S. exit taxes were introduced in 2008. They were introduced because more and more Americans were renouncing their U.S. citizenship to escape U.S. taxes. If you are expatriating and fall under any of the relevant categories, you will be considered a covered expatriate by the IRS. Covered expatriates are obliged to pay tax on all assets they own. This applies whether they sell them or not. Even your main home is subject to this tax if you decide to keep it. All assets will be taxed as if you sold them on the day before expatriation. All assets deemed sold must be marked to market and be priced at a fair market value. This draws a line in the sand on your U.S. tax status. Oleg Tinkoff was born in Russia. He was naturalized as a U.S. citizen in 1996. He filed tax returns between 1996 and 2013. Tinkoff founded a financial services business based in Moscow in 2005. He owned the shares in this business, called Tinkoff Credit Services, through an offshore company. In 2013, Tinkoff Credit Services did an IPO on the London Stock Exchange. It had a multi-billion-dollar valuation. 3 days after the successful IPO, Tinkoff went to the U.S. Embassy in Moscow and renounced his U.S. citizenship. When Tinkoff filled out the expatriation form, he claimed his net worth was only $300,000. He did not report any gains from the IPO. According to the IRS, Tinkoff had assets of $1.1 billion. They claimed he should have paid U.S. exit taxes of $248 million based on the value of his assets. The U.S. government had Tinkoff arrested in London. He was charged with criminal tax evasion and his extradition was requested. Ultimately, Tinkoff settled the case with the IRS and paid a total of $509 million. He pled guilty to filing a false tax return. He did not receive any jail time, but the fine of $250 million was one of the biggest in U.S. history. He paid double the U.S. exit taxes due. This was on money that was not earned in the U.S. He didn't live in the U.S. at the time. This tax liability came about only because he was a U.S. citizen. U.S. exit taxes should be taken seriously. The U.S. government has shown that they will pursue former citizens for U.S. taxes, even after they renounce their citizenship and are not in the U.S. Anyone seeking to build wealth outside the U.S. is best to get another citizenship and renounce before it becomes too expensive. If you renounce when your assets are below $2 million, it won't cost anything, apart from the renunciation fee. U.S. green card holders who want to avoid exit taxes should consider relinquishing their green cards before they reach the 8-year mark where the exit taxes are due.